think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. So today we're going to talk about why the price of gold and silver are falling along with other precious metals. So let's go ahead and jump into this. So we know that over time, gold has increased in value. We know that fiat currencies have failed, and this is taught a lot within the gold and precious metals communities, which is true. However, there are times where they perform poorly due to the shift in monetary policy. So right now we're seeing that the Fed is tightening. They are raising interest rates. They are trying to be more conservative to bring down inflation, and those actually contribute to the price of gold and silver actually going down, because if a country was to be financially responsible, then the price of gold and silver would be low, because there's more trust in that system, there's more trust in that currency or whatnot. And so obviously it's a psychological thing, because we know that the dollar has lost a lot of value. I think it's over 96% of its value since its inception. So the markets may just be interpreting that in that way. I mean, obviously, and obviously there's some trading that goes along or whatnot that affects the price as well. But I believe that this is one of the biggest impacts of the price action that we've recently been seeing. So let's go ahead and jump in. All right, so here we're on Yahoo Finance. We're just looking at some stocks right now. And usually we go through the bar graphs, but I mean, the line graphs are fine for this. So we're looking at Barrick Gold right now. Barrick Gold is tanking. It's at 1640. I mean, obviously the high back in 2020 was about, I think it was about close to $30. I think that's when Warren Buffett bought in. He bought in pretty high, and then now it is back to about 1636, and it's back to its 2020 low almost. So we see that that's happening in the gold sector. And this is just one stock, obviously, but I mean, we could look at some of the silver miners and producers. Like this is First Majestic Silver. Let's look at their chart. So silver's way down as well. I mean, it's not as low as 2020 when the pandemic started, but it is pretty low, and it is on sale. It is on sale. So we see that the stocks have been plummeting, and we also see this has happened with the gold price itself. So let's go ahead and look into that, and then we're going to look at how this is impacting, how the monetary policy is impacting the price of gold. Obviously, we're not far off the highs. I mean, the highs were 2100, something like that. We're not super far off. I mean, we're still at 1726, which is pretty decent. I mean, it's not as volatile as like a cryptocurrency like a Bitcoin or whatnot. So gold is to prevent you from going poor. It's not necessarily intended to make you rich. I mean, unless you bought, way back over here, November 08, when it was $600 an ounce. I mean, you could have made a lot of wealth in that way. Or if you bought way back here in the early 2000s. I mean, I was too young to even know, what was going on then. So I just keep accumulating, right? So right now the gold price is down. So now we're going to look at like what is happening with the price that's making it really just start to fall. So one thing we're going to look at is the DXY. So this is the DXY. All right, this gold line, as you can see, they are very they perform opposite. So this is the US dollar index. So when the dollar is outperforming, gold goes down. When gold is outperforming, the dollar goes down, as you can see. I mean, look at this. I mean, even in the early 2000s, the dollar was strong, a lot stronger, had more value or whatnot. They began to, debase the currency even more, printed more money and such, especially ever since the global financial crisis. And, gold was very low. And then you start to see gold rise, and the dollar, continue to chop along sideways down here. I mean, as it plummeted from up here. And then now you're starting to see that the dollar rose again in 2015. This is when the Fed started raising interest rates again. after QE's doing quantitative easing and pumping money into the system and the banks and whatnot, and gold took a sharp decline. So as the Fed raised interest rates and was tighter on monetary policy, the dollar went up and gold went down. So now we're seeing that again. We're seeing that when 2018 the Fed started tightening, gold went down again, and then we had the pandemic start. We saw gold run from way down here to up here to close to $2,100, and the dollar didn't do as well. I mean, the dollar started to come down here in this area. So that's the DXY. So currently, we're in this year, and so 2022, the Fed is tightening, so the dollar is going up and the price of gold is going down. So that's how that interacts with each other. I also added some other currencies just so that we can, just see what's happening at other currencies, right? So the euro, there's been a lot of talk about the euro. The euro is this blue line here, and how the euro is just plummeting. And when the euro's strong, the dollar's strong, the dollar's weak. From this chart, what we're seeing, you just see these polar opposites of the blue lines and the brown or orange lines. So now you're starting to see that the euro is starting to tank. The European Central Bank is in a really tough situation. It's a collective of, it's collective of bankers who manage multiple countries. It's not just they cannot just decide for one country, and each country has different set of financial troubles or whatnot, and debts and whatnot, and so they can't really figure out, okay, do we tighten policy, do we loosen policy, because this country needs to be more loose and this country needs to be more tight. So they're really in a tough situation. So as you can see, the euro has been going down, and so the dollar has been rising. Currently, the dollar is one of the strongest currencies. I think the ruble is stronger than, well, I wouldn't say stronger than the dollar, but it's outperforming the dollar for sure. And then you're seeing that gold is still up. So if you've been in euros, it costs you more euros to buy gold than before. So that's how that works. So if you're in a European nation and you use the euro, it costs you more euros to buy gold now, because the euro is going down, has went down a lot. If you're in the US, it costs you less dollars to buy gold. It costs you less dollars to buy gold because the dollar is rising and gold has been falling. And then if you add in any other currencies, which I was trying to add in the Japanese yen, which the Japanese yen has been having a really hard time as well. And I think this is the euro to the Japanese yen or whatnot. So yeah, I have to work with this program and kind of get it, to where I understand it better. But for example, okay, here's the dollar Japanese yen. So $1 gets you more yen than it did previously. So as you can see, in 2011, like, this was less dollars would get you more yens. The yen was stronger around this point. Now the yen is weaker as the chart is going up, because now $1 gets you more yen whenever you convert into the currency. The yen has been struggling a lot. So gold in terms of yen, it's going to cost you more yen to buy an ounce of gold. Same thing with other currencies, such as the currencies in like Sri Lanka, where they're having more hyperinflation and things like that. So that is kind of how the gold price and silver price reacts to how the currencies are performing. And so I wanted to give you all that macro outlook so that you all stay firm in your convictions and knowing what you hold. This is temporary. Eventually the dollar's going to have to turn over. The Fed is going to have to print more money, debase the currency even more. This is historical. It's been happening before. So eventually that's going to happen. So I mean, if you're able to, I mean, it's a good time to, continue, stacking or whatnot. I mean, especially some of these gold equities. If you have a retirement portfolio or whatnot, you can get some of these equities cheap, and then the next bull run, you will be happy. So just wanted to show you all that, and I want to thank you all for joining the Money Level Show today. Be sure to hit the like button to subscribe, and I appreciate you all. All right, peace.